All right. Well, welcome everyone. We are delighted to have you all join us in today's discussion on a review of recent innovations in smallholder finance hosted by IDH and CGAP as co-chairs of the UNSGSA for Financial Inclusion Working Group on Agricultural Finance. The webinar today will be facilitated by Iris van der Velden, Director of Learning and Innovation at IDH, Peter McGonaghy, Policy Advisor at the UNSGSA, and myself, Emilio Hernandez, Senior Financial Sector Specialist at CGAP. And we're also joined by a stellar group of panelists, Hedvig Sivertsen from AGRA, Juan Buchenau from the World Bank, and Prasoon Kumar Das from APRACA, who I will introduce more formally in a minute. But first, let me go through today's agenda. Next slide, please. So I will start with an introduction to the work of UNSGSA's Working Group on Agricultural Finance, which produced a recent action report on ag finance innovation, serving as the base for our discussion and reflections today. Peter will join me in saying some words on the launch of the report. And then Iris will walk us through the key highlights from the action report to motivate our conversation. And then the bulk of our discussion will be with our panelists, who will share their reflections on policy implications for agricultural finance and financial inclusion. We will then end with a 30-minute question and answer where you will have a chance to interact with our panelists in breakout sessions. So please note you will be asked to connect to a different Zoom link for each of our panelists, and you will be leaving this plenary session and joining one of the three panelists to continue our discussions. So without further ado, I'll use next slides to introduce our three panelists. So first we have a colleague, Hedvig Sivertsen, who is responsible for designing and implementing the inclusive finance strategy at the Alliance for a Green Revolution in Africa. AGRA designs and deploys blended financial instruments, value chain finance, and digital financial products, technical assistance funds, and acceleration funds to make financial services accessible and affordable to agricultural SMEs and smallholder farmers in 11 African countries. Prior to coming to AGRA, Hedvig served 4 years as CEO of DOB Equity, a $100 million single family office impact fund, which invests in SMEs in East Africa. And she also was deputy director and senior consultant at Triodos Facet, now Palladium, which is a consulting firm specialized in entrepreneurship development and financial services delivery to SMEs in emerging markets. We're also joined by Juan Buchenau, who is Senior Financial Sector Specialist at the World Bank. He is a core member of the Global Agricultural Finance Team and of World Bank's Community of Practice on Cooperative Financial Institutions, where he works with governments globally on policy diagnostics and design related to agricultural finance. Formerly, he was in charge of several programs in support of financial sector authorities to improve access to finance in Latin America and the Caribbean. And before joining the bank, he was executive vice president of an American microfinance institution serving immigrants and their families. Prior to that, he was lead advisor of the German consulting firm IPC ProCredit, helping commercially oriented microfinance banks in Latin America, Africa, and Eastern Europe expand their services to smallholder farmers. We also joined with Dr. Prasoon Kumar Das, who is Secretary General of the Asia Pacific Rural and Agricultural Credit Association, APRACA, based in Bangkok, Thailand. APRACA represents over 80 public and private financial institutions and supports its members' work in agricultural finance and rural development. Prior to leading APRACA, Dr. Prasoon was Regional Project Manager at the International Fund for Agricultural Development, implementing projects in China, India, Indonesia, Philippines, and Thailand. He also served as Research Director for South Asia in Lancet DFID Project on Agricultural Nutrition in South Asia, and as an international expert in agricultural value chain and development finance at the Food and Agriculture Organization of the United Nations. So we have a stellar team of panelists that we're very delighted to have you. So why don't we go ahead and get started with the intro. Next slide, please. Thank you. So the key motivation for all stakeholders in the Ag Finance Working Group that was put together came from the recognition that the finance and agricultural sectors will not be able to close the $170 billion agricultural finance gap with our business as usual. So holding this concern a priority, the UNSGSA convened the Ag Finance Working Group, which CGAP and IDH agreed to co-chair. The working group intended to bring a very diverse group of lead businesses from different industries like agriculture, banking, payments, and telecoms, as well as development actors facilitating rural and agricultural finance. Each member recognizes the potential of smallholder farmers and agri-SMEs, both for socioeconomic development as well as for business growth, and they have been making important investments to innovate their business models, leveraging on digital technology to serve these customers better. So the experiences and lessons they have learned so far were really the core of our efforts to summarize them and share them in this action report recently published. Also, in the spirit of the new type of cross-industry partnerships being built and the dialogue that was actually promoted by the working group, some of its members have agreed to put lessons into practice and join efforts in a pilot in Kenya to reduce farmer financing risk and increase access to financial services for smallholders. We will hear more details on this pilot later on. Next slide, please. So the efforts to innovate in agricultural finance are not new. For many decades, various private and public actors have been working on this and making important progress. However, there is persistent bottlenecks that still need to be addressed. First, limited understanding that financial institutions have on smallholder needs, the risks that they face, and the risk management strategies that they use along with other actors in the agricultural finance value chain. So this really leads to a mismatch between demand and supply of financial services in rural areas. Second, the cost of delivery of financial services in rural areas and for smallholders are high if we use the mainstream banking business models. And third, the ag value chain finance arrangements led by agribusiness have been critical to finance agriculture, but can only meet about 20% of the short-term financing needs in the sector. And they cannot serve non-farm financial needs, which we know are crucial for smallholder households, right? Lastly, the high cost of mainstreaming banking models result in an unviably high interest rate for smallholders. So we really need to find lower cost models to make it work. So what is new in this report? Really, what this report has is a description of emerging new partnership modalities between private businesses engaged in very different industries, which traditionally are not associated with the agricultural sector. So we see partnerships for agricultural finance that are coming from firms engaged in agriculture, banking, payments, fast-moving consumer goods, fintech, and e-commerce. Now, partnerships for agricultural finance are not new. What is new is that there has been a very fast adoption of digital technology by these various private businesses, who have a rising interest in serving rural markets. And it is this fast digitization process that is making it viable to come up with these partnerships which are breaking silos and are very good at sharing data and non-financial delivery channels to improve the value of financial services to smallholders and make it economically viable for providers to deliver such services. We also identify important risks that need to be managed in terms of consumer protection and avoiding monopolistic behavior coming from these new partnerships, which we discuss in the report. And since no single actor has the capacity to fill the rural finance gap, these new partnerships are starting to overcome some of the persistent constraints that I mentioned previously. So I'll go over to next slide, and I'll ask Peter to say a couple of words of why UNSGSA engaged in this effort.
Great. Good morning, good afternoon, good evening, everybody. My name is Peter McConaughey, and I work as a policy specialist at the UNSGSA office. So first, a great big recognition to Iris at IDH and to Emilio at CGAP for leading the working group. The objective of this working group was really to document and encouraging promising innovations for delivery of financial services to farmers, as well as to focus on the role of partnerships, public and private, and of these new actors to scale up innovations. It's a great milestone to recognize a publication through these series of webinars, and reflects many months of hard work and a lot of technical input from the various members of the working group. So I wanted to really congratulate the leaders of the working group, as well as to recognize the hard work, and also to underscore the importance of agricultural finance and farmers as one of the key vulnerable groups where there's still very strong financial inclusion gaps across the world. And these gaps are being placed under additional strain because of the impacts of COVID-19 most recently, and estimates of the effects that border closures, market closures are having on productivity, on declines in crop production. That coupled with the need to increase agricultural production significantly to meet growing population demands underscores the timeliness of this report. The UNSGSA office is really thrilled to be a part thus of this effort, and one of our core mandates is to really raise up issues, technical issues, through policy dialogue at the highest levels to really advocate for effective policies and investments and reforms needed to advance financial inclusion, including for smallholder farmers to advance agricultural finance. So we're looking to use the dissemination of this report also to gather feedback and to gather ideas to help chart the next phase of our engagement in terms of what are really the critical 2 to 3 issues that we need to be focused on. So I'll stop there and allow maximum time for our panelists, but really enthused for the UNSGSA to be a part of this, and looking forward to using our greatest tool, which is Her Majesty Queen Maxima, to raise up these issues and to try to advance and accelerate the policy dialogue at the country level. Thank you.
Thank you, Peter. We can now hear from Iris, so she can walk us through the key messages from the action report.
Yes, I will start with some of the key insights. Isabella, can you give us the next slide? So Emilio already highlighted that the concept of partnerships is not new, but I think what is new about what we're trying to do is to bring together players that normally are not working together, and we think that there are actors that all have their own strengths. That actually can help in providing affordable financial service to farmers. So agribusiness, they have a lot of knowledge on smallholder farmers, and they have infrastructure and service distribution channels. We know that financial institutions have capital, but also capacity to design not only agricultural financial products, but also non-farm financial services. And the other players that come into play, like mobile network operators, mobile payment companies, fintechs, fast-moving consumer good companies, e-commerce firms, and they have something else that they bring to play, which is product development. Many of them have a large agent network, and they're able to really go into rural areas. So if we combine those strengths, Isabella, can you give me the next slide? And set up those partnerships where data is being shared and technology is being used, we think there are several benefits for different stakeholders in such partnerships. So first of all, for agribusiness and traders, it would help them secure supply because there's more external finance for farmers and they can have greater operational efficiency. For banks and financial service providers, it can give an opportunity to expand their agricultural portfolio and have a higher quality of the portfolio. For tech providers, it can open up a new market, new revenue streams, and they can leverage their efficient delivery channels. And last but definitely not least, most importantly, also farmers would benefit because they would get access to more affordable financial services and products that are better tailored to their needs, which would allow them to generate more income through investment in their farming, but also support them with better resilience to shocks with savings and bridge finance. And with those new setups, we expect that the cost of financial services will go down and farmers get better access to other services like inputs, information, and access to markets. Isabella, can you give me the next slide? So how would this look like in practice? So Emilia already highlighted in the beginning that we're not only sharing the key insights of the working group through this action paper, but we also want to put it in practice. So we're working on a pilot in Kenya, and this is led by my colleague Jay Akireddy. And this pilot is together with MasterCard, Rabobank, with Equity Bank, the Cooperative Bank of Kenya, and with ETG and Ecom, and with EAFF. So what's important here in this pilot is there are different types of data that is being shared through a platform which will be facilitated by the MasterCard Farmer Network. And by sharing that data and unlocking it in an anonymous way through this platform, this information will feed into an innovative credit scoring card, which is developed by Rabobank, which allows for better assessment of risk. We're not only looking at the assessment of risk, but also at risk reduction through providing tailored services to farmers through, for example, the farmer groups and farmer cooperatives. We created a short animation. Hopefully the technique is helping us. So we would like to show to you a short animation which gives the same story, but in a visually supported way. Isabella, can you start the animation?
There are approximately 270 million smallholder farmer households in developing countries that require around $240 billion in agricultural and non-agricultural finance annually. Formal financial institutes have, until now, failed to meet their short-term financing needs, leaving a $170 billion gap. They lack the data to understand farmers' risk and the infrastructure to reach them with low-cost products. How can we close the finance gap in smallholder agriculture so that smallholders are able to invest in their farms and families? Through innovative partnerships that leverage data and technology to reduce the risk, partnerships with benefits to everyone. Banks can increase their agricultural portfolio by providing farmer-centric services. Agribusiness can increase their efficiency and secure supply through leveraging data and new financial channels. Tech providers can develop new revenue streams by diversifying their products and improving their delivery channels. And smallholder farmers can get access to the agriculture-related information, inputs, and the affordable financing they need to grow. Agriculture Finance Working Group is piloting this tech and data-enabled partnership approach with IDH Farmfit in Kenya. Together with our partners, a digital platform is set up that aggregates and anonymizes supply chain data from the field. The results provide new ways of looking at smallholders' credit scores, not only estimating the risks of farm finance, but also suggesting ways to reduce risk through the right service packages to farmers. Partners share risks and rewards. In 2021, this pilot kicks off to engage 20,000 smallholders in the coffee and maize sectors in Kenya, dispersing $4 to $6 million in loans. By working in partnerships that leverage our collective strengths, we can close the gap in smallholder finance. Will you join us?
So this small animation hopefully gives you an even better feel for what we're after with the report, but also with the pilot. There are a couple of key recommendations that we would like to highlight specifically for policymakers to promote partnerships in delivering smallholder finance. So the first key recommendation is that it's important that there is support for research and development to design and test new business models for cross-industry partnerships. And second recommendation is that there also needs to be a forward-looking regulatory and policy framework to encourage these partnerships and to mitigate risks. Our third recommendation is that to enable rural service ecosystems by offering public services to rural platforms and agent networks, these can be shared with private partners. So also governments have a role to play in rural service ecosystems and can actually use the rural platforms for support to smallholder farmers and SMEs. So we're keen to get the input from our panelists. And I would like to start with Hedwig. Isabella, can you give me the next slide? So Hedwig, in your position with AGRA and also in the introduction, Emilio highlighted that you have provided support to quite a number of cross-industry partnerships with both public and private sector. Can you, with the participants, share some of your key learnings and insights? And based on these learnings, how could R&D resources in smallholder finance space best be deployed according to your experience?
Thanks, Iris. That was a great summary of the report. As said, I'm working for AGRA, and AGRA exists because we are busy with 200 colleagues in 11 countries to improve the yield and incomes of 30 million farmers in Africa. To do that, I'm based in Nairobi, and I had the privilege to spend the past 5 years in what you can call a research and development bubble for smallholder finance. Because within a radius of 500 meters from my office, MasterCard Foundation has funded close to $100 million on the development and testing and scaling of digital solutions for smallholder finance. So that's a fantastic pool of money. Because we had the 50 million Fund for Rural Prosperity, which is managed by KPMG. There is the $30 million AgriFin Accelerate program managed by Mercy Corps. And as AGRA, we have managed a program called FISFAP. So altogether, that's $100 million that we have deployed into developing this type of partnerships for digital solutions for smallholder farmers. Now, what have I learned in the past 5 years from these 3 programs? I think one important element is that R&D funds need to be spent on 3 complementary items. One is to give subsidies in order to de-risk the development and scaling of solutions. Because the business models are unknown, the outcome is unknown, we don't know whether it's going to work technologically, whether the business case is working. So there is a need for subsidies to de-risk the solution providers. The second item that needs to be funded is research to understand the farmers' needs, to understand business cases, to exchange know-how, etc. The third thing the R&D fund should be spent on is on technical advisory services, both for all of the partners, right? So both for the providers of the solutions, but also for the people that are going to use the services, farmers. So there's subsidies for operational costs for the solution providers, research and technical advisory services. A second lesson that we have learned is the selection of partners that deliver the digital solutions to farmers. For Agra, it's key that partners are selected competitively, that partners have skin in the game, and that they are committed to becoming sustainable. Over the past 5 years, we've seen many what we call grantpreneurs, people that make prize winning and grant funding as their core business, instead of the delivery of services and solutions to farmers. So I think it's very key that we select the partners that have a genuine interest to deliver a service to farmers in the further future. The third thing I wanted to share that we've learned is some key features, which are very important when you implement research and development programs. The first one is that solutions should start from pain points of farmers, right? What is the problem that farmers face? And not from the technical solution, which we have seen often happening. And so often it's the hammer that is looking for a nail, instead of listening to farmers, understanding what their problem is, and then working towards a solution. The second feature that we have learned is that a stepped disbursement, so funding in steps based on milestones, opens the possibility for failing fast. Right, we have funded quite some solutions that in the end couldn't make it, or that didn't have a market, or that couldn't make the business case work. And by having this step disbursements, we've been able to save money by not further investing. And I think it's also good to every now and then sit down and see, okay, is this going anywhere, right? Do we need to continue? So to fail fast is very important. The third one is a strong learning agenda, which is key for documentation of successes, and not only successes, but also failures. And that is a problem, right? We often read successes, we don't read the failures. I think it's very important to have a strong learning agenda, otherwise we don't know why R&D is being funded. The fourth one is that we have seen that simple solutions, which combine technology and human touch interface, humans talking to farmers, humans explaining things to farmers, combined with digital technology, have more chance to scale. A tech-only solution, although it might be very helpful in these COVID times, is not going to work. You need to have people on the ground that work directly with farmers. And I think that brings me to the key lesson learned for us in Agra, is that digital solutions should focus for the moment on organizations that work directly with farmers. So agriculture SMEs and rural financial institutions. So that's where we have seen the most scale, right? Where we have tried to automate SACOs, or where we have helped agriculture SMEs to automate or digitize their outreach to farmers. Those are the solutions that have reached the most scale and have the most chance of becoming sustainable. Now, because R&D funds are so precious, it's not every day that MasterCard is going to give $100 million for research and development in this area. I think it's very necessary that we make the utmost use of the funds. So I formulated 2 ideas from what we have learned and seen that can make the use of R&D funds more efficient and effective. And I'm happy to discuss those in the breakout session. One is that I think we need, as a community, we need to invest and convene around an open farmer database. What do I mean by that? I mean, we have come across farmers that were registered for 20 different solutions and still not having access to seeds and fertilizers and good agronomic practices. And over again, people come and do the geolocation of their farms, ask about crops, do household surveys. And that knowledge is repeated over and over again and is held by private sector entities or NGOs or platforms, you call it. So I think we can save a lot of money, because this is eating sometimes more than half of the budget of R&D to register farmers. So if we could convene and agree on an open farmer database where all that information is together, and then that everybody can build APIs to access that information. Of course, there will be issues with data security, etc. But I think really a function for public sector is to plea and advocate for this open farmer database. The second thing I want to stress in order to make more effective use of R&D is to incentivize worst case documentation. I mean, we don't read those stories where things have gone wrong. And I'm sure within the $100 million that we have spent, I mean, there has been a lot of failures. Things have been going wrong. Companies have gone bankrupt. Farmers are not using the solutions, although they have been registered. And the difference between registration and usage is big. So I think we need to somehow find ways to incentivize the fact that people also document their failures. And now it feels that if you document a failure, that maybe you don't get the next type of money to manage. So that should change. And if there's anybody who can do that, it's the public sector. So I think by the open farmer database and the incentivization of worst case documentation, we can really make better use of the precious R&D money that is there around. So to wrap up, I want that research and development combines technical assistance, research, and matching subsidies for the people that implement the solutions. They will support genuine entrepreneurs and not grantpreneurs. So that requires the R&D program manager to source partners outside conferences and events. I think that is an important lesson for the people managing R&D funds. I think we need to have a clear learning agenda that is not afraid of documenting failure. And then the most important advice, maybe to my queen and Iris's queen, is to have an advocate for an open farmer database. I think if there's anybody in the world who can do that, she can plea for that. So Queen Maxima, do us a favor and go for the open farmer registration database. Thanks, Iris.
Thanks, Hedwig. That was very insightful. Over to you, Emilio.
Yes, so it's okay. I unmuted myself. I keep being muted and then I'm muted. Yes, Juan. So we turn over to you. I mean, we're very interested in your perspective, having advised governments on agricultural finance policy and regulation. And as we were documenting the the lessons and the experience from our different working group members, we realized that, hey, policy and regulation plays an important facilitation role, an enabler role. And we wanted to ask you, what in your experience are the key issues that must be addressed to support a fruitful interaction between financial institutions, agribusiness, and tech players, this type of non-traditional partners that haven't worked before in the past, and there may be no specific regulatory framework already there made, ready to be used, because these are new things. So how can governments enable and not unduly limit this type of innovation in your experience?
So, thank you very much, Emilio. Much appreciated. Yes, this is a key aspect. So, and Hedwig already touched on some of the aspects where governments can play a significant role in facilitating, or also and I will also talk about what they can do to facilitate, but also at some aspects where they should be focused so as not to obstruct these type of things. And this is the main focus. So I would like to focus on 5 issues. So the first one is the issue of consumer protection and data privacy. And well, if we talk about this open database that Hedwig was referring to before, the question is, while this is very useful, and we see, for instance, in Kenya that the use of this information can lead to develop scoring models and all these type of things. On the other side, there is a very, very important need also to protect the data of the people so that they are not misused. The data can be misused, and in a world where more and more information is becoming available about what people do, data protection becomes the more important, and we see it also, well, in our country, in Europe, and in the United States, this is also becoming a more important issue. So data protection is a key aspect, and data protection is something that can be very limiting for the emergence of this type of partnerships, especially if there is uncertainty regarding liability. If providers who have data share this data and the data is misused, who is the one who is liable? How can this be ensured? How can we ensure that the customers, the providers, the smallholder farmers are protected in their information? So new approaches are needed. The old approach is basically to say that the individual who provides the information has to allow the use of such information. So you have to sign the signature of the allowance to use information. This is not something that should be looked into the future, but more models which put liability, which put the responsibility on safeguarding the data on those institutions and firms that generate the data, that manage those data. This is one aspect. So the other aspects are then aspects which relate to the operation of fintech providers mainly, and also of these type of alliances, and their issues which relate to the registration, to the operation, licensing of these entities. It becomes very important. Issues such as minimum capital requirements or requirements for the opening of branches, for the opening of service points, can be very limiting for the expansion of new technologies, and they should be looked at into very carefully. Importantly, when regulators define these type of things, oftentimes they are defined for brick and mortar institutions. So the fintechs and these new arrangements require different types of regulations. So it is important that regulators are engaged in early stages in the definition of these type of requirements, so that they feel comfortable on the one side that not undue risks are arising in the financial sector and in the commercial sector, while on the other side allowing innovation to thrive. In some countries, what they have been doing is implement what is called regulatory sandboxes in order to test such approaches. So this is a second area. The third area, very important, is taxing. Taxing can be very limiting for innovations, especially if in the case of if we have paired transaction taxes, if we have levies that limit small transactions, that is this is something, or that are posed on innovating firms. This is something that can be also very limiting. And fourthly, we have the issue of subsidies, which also Hedwig mentioned. So subsidies can be important facilitators, but I would like to focus on a different aspect, is that subsidies can also be very limiting to the introduction and to the operation of startups, especially if they are excluded of subsidies. And here we have the issues, for instance, in Ghana with the use of subsidies for fertilizers, which is very common in many African countries. So if these inputs are subsidized, this then generates a distorted market where new entrants oftentimes and usually do not have access to the subsidies. On the other side, there are quality control issues on the input. So these things can also limit severely the introduction of innovations. Last and not least, we have something that is also coming from that has been limiting agricultural finance in a long time, and that is the use of interest rate caps. Interest rate caps which oftentimes are defined very, very low, and which make it impossible to defray the costs of providing financial services, especially when we're talking about very small transactions. So if very small transactions cannot be offered at a cost covering basis, then they will not be offered, and this is something that can stifle innovation. Thank you.
Thanks, Juan. We have another third panelist. So, Dr. Prasoon, your members are development banks. Can you maybe give us an example on how they're using digital technologies and how you see that those partnerships actually help to diversify the rural service ecosystem for smallholder farmers?
Thank you, Liz. Good morning, afternoon, evening to all our Asian members. The question you asked is very interesting because, as one was also talking about how the partnership can be built based on seen around the fintech. Actually, we have some, we have 24 member countries and across the Asia Pacific region, and most of them are either development banks or the central banks, and we work with both of them. So we have three areas of our work together. One is the policy area, then the practice, and the capacity. So I'm not going into the detail of that. We can talk in the breakout session on that. But I will just give you three solid examples where this partnership for the development banks and the fintech companies, as well as fintech developed by the bank themselves, which is not a bank-led, but established by the bank, are very, very useful. First of all, I'll give example from India. During this lockdown period, most of the farmers, they were not availing the finance from the banking system, because majority of the government banking system are not that good in fintech. So what NABARD did, which is an agri-focused development bank, they partnered with a Jai Kishan. There is one startup fintech company who work in the rural areas. And in 3 months' time, like from April, May, and June, in 3 months, this particular partnership actually reached out to 5,500 farmers, which is a huge number, and they disbursed $6.5 million US, which is huge amount in terms of keeping in view the lockdown and also the coronavirus pandemic in the country. So this is a fintech company which has a linkage both at the front end as well as at the back end. So so they have this agreement with those, and the NABARD fund can reach to those areas. So there are three areas they covered here: is the financial inclusion, second is the smallholder finance, and also the financing the value chain actors, those who actually in turn finance the smallholder. The second example, which I think probably all of you know about, the bKash, which was established by BRAC Bank, which is one of the major member of APRACA since long, and they, in collaboration with the central bank, they created the enabling environment, and now bKash became the second largest provider, mobile money provider. And as one was talking about the cost, actually, if you see that they don't take even any free of cost the money transfer from rural to the from the cities to the rural areas, which is a huge service to the smallholder farmers or the rural people in Bangladesh. So that is another very interesting partnership where the financial inclusion, smallholder finance, and input suppliers are also engaged in this whole system. The third one, which is very interesting in Myanmar, being a very small country, not much developed fintech, there is a small startup which is called the Village Link. It's a technology-driven brand for rice, because Myanmar is a rice-producing country, and they have Down Capital, which is a kind of a Chinese investment there, but it's a local Burmese company. And Marcy Crop and MADB, the Myanmar Agricultural Development Bank. So these four came together, and now they are supporting the livelihoods and food security fund, which is a joint fund for many donor agencies. We call it a LIFT fund, and they are supporting them to reach out to the hinterlands in Myanmar. So these are three solid. We do have many examples, like in Cambodia, they created a new cryptocurrency. The central bank created a cryptocurrency also, which is a kind of a fintech, and all the banks come to the same platform. So there are many examples. If you give me more than 5 hours, I can talk about it. But what actually I want to drive home is that all the PRACA members, those who faced problems before COVID, now they have adopted this particular digital financing, and they know that without partnership it is not possible. So most of these banks and development banks and the central banks, they're trying to create an environment where they can flourish. So I think that's my take.
Thanks, Prasoon. It's very interesting to hear, right, that these things are already happening and that some of the developments have been accelerated due to the pandemic. We are keen to allow our participants to have a more interactive discussion with the panelists. So what we are going to do, and we did it last week, so we know it can work. So what we will do is we will ask you to think about whom you would like to have a further discussion with, whether that's with Juan, with Hedwig, or with Prasoon. And what you need to do is copy the Zoom link of the panelists that you would like to join. You need to close this session and start a new Zoom session to continue the discussion in a small group. We very much welcome you to actually join us. We think our panelists have a lot more to offer, and I think it's great to have a bit more discussion in a smaller group. So please copy the Zoom link. It's also in the chat function. Decide whom you want to join, and we hope to see you all in one of the breakout groups in a moment. For now, I would like to thank you for joining us for this plenary part, and we will also get back to you with a summary of the webinar after this webinar. Thank you so much, and see you in a minute in one of the breakout rooms.
Well, we're waiting for other attendees to join, but we might as well could get started if you want. Well, first of all, would you have any questions or comments you'd like to share with us, Danga, for Prasoon to reflect on?
Yeah, I would love if Dr. Prasoon could give some other examples that he was about to cite. So he was giving some interesting examples. So, Dr. Prasoon.
Yeah. So you want Emilio, should I start? Or wait for other people to join, or let's start?
Well, maybe let's start for the sake of time, and as people join, then we'll get more questions. Yeah.
Okay, I was about to talk about that the very interesting development in Cambodia. They have created the first central bank digital currency in Cambodia. They call it Bakong, which is basically a platform of digital finance, and all the banks and MFIs. They have two types. MFI, one is MFI, those who can take deposit, and non-deposit taking MFIs also. So only the deposit taking MFIs and the banks, private and government banks, all can be member of this Bakong. Okay, Bakong, they created this platform to in Cambodia they have two kind of currencies are running. One is the real, which is their own currency, and one is the dollar. So since last 10 years, people are talking about Cambodia becoming a dollarized economy, and real has become redundant to them and all. But now this Bakong is a currency created by the central bank themselves as a digital currency, which is very interesting because real is 20,000 real is $1. So they cannot carry the real with them. So they want to transform the country to a digital economy with real as their currency, and all the Bakong will be converted into real. So that is what actually this particular. So all the banks, the clients of the banks can avail this facility through the POS or maybe through the computers or through the app, Bakong app. So they can go anywhere and use this Bakong app and use this digital currency. So this is a very, very interesting, and I think this is the first time in Asia that a central bank-led digital currency has been developed. And actually, they got the support from Japan. So one of the company in Japan, they call, I don't know the name of this company. I think it is, the company name is there. Yes, Soramitsu. Soramitsu is a blockchain company basically in Japan. So they supported this particular project. And this project was also supported by the Asian Development Bank. And we, APRACA, provided some kind of, hand-holding to some of our MFI members in the country. So that's what the Bakong. If you want to know more about Bakong, you can go to, they have a separate website. They have a dedicated website for Bakong, BAKONG. So that is a very interesting currency. Yeah, digital.
Just to let you know, Prasoon, we have another attendee, Ajay Kumar Palat. Hi, Ajay Kumar. Would you have a question for Dr. Prasoon? Or a comment you'd like to share with us? You are muted.
He's muted.
If you can hear us. Ajay? Can you hear us? Oh, Ajay, well, you can hear us. I'm seeing your chat, but we can't hear you. You're muted. You need to press the unmute button at the lower left-hand side where the microphone appears. Okay, so he seems to be having some issues with the audio. No worries. Maybe try to fix them. And we also have another attendee, Mayur Varandani. Hi, Mayur. Would you like to pose a question for Dr. Prasoon? Okay, no questions. So actually, I had a couple of questions, Prasoon. So from the example that you showed between BRAC and Bcash with the government, or the case that you mentioned from India, how do you foresee, first of all, if you could clarify what is the key financial service or services that are being offered to smallholders, and what are the things that smallholders are solving with that financial service? Is it a payment solution? Is it a agricultural input credit, or is it investment credit, or is it insurance? Yeah, if you could elaborate a bit more on that, because I think that gives us a bit more understanding of what farmers get out of it.
Actually, in case of India, if you see the fintech, which is a startup fintech, Jai Kisan, they collaborated and partnered with NABARD, who actually cannot reach out to the last mile, but this fintech can reach out to the last mile. So the first advantage of this particular fintech and a collaboration with NABARD is that NABARD is providing the fund which is most required for capital for funding for this particular fintech to run, and they provide the most necessary part of it is that reaching out to the farming community. Now, this is a mutually interesting partnership and mutually based on mutual requirement. Now, this particular fintech, they provide three services. One is that they provide lending to the farmers who are the members of the FPO, which is the Farmer Producer Organization, which are being created in India in numbers, At present, maybe there are 7,000 FPOs, but the problem of the FPOs are because they are scattered and mostly the hinterlands. So the reach out by the financial institution to the FPOs are very less. So this particular fintech is, their endeavor is to reach out to them, and they are reaching out. So that is one, first of all. The second part is that they are engaged with the input suppliers as well as the output the consumers, like the markets, the local markets, the APMC, the Agriculture Producer Market Committee. So they have both the value chain actors as well as the producer are in their financial services. So they provide all the three to the smallholder farmer and financing to the high end or maybe to the processors or not. So no, they are going up to a certain level where the farmers can go and reach out. So that is in case of India. But while we go to bKash, which is a established mobile payment services, here they provide three services. One is the payment, as you said rightly, the payment services, which is, and the most important one of them is the remittances, which is very important in case of farming community, that they need remittances either from the rural areas to the cities, because they have the children, they are studying in the city areas, and they if they want to buy some kind of capital, investment capital need, they receive money, and this is free. So that is very important, that if they are the members of or the client of a bank, then they provide these services free, but at up to certain level, right? They call it a 50,000 taka. After 50,000 taka, they charge. Okay, so this is a very interesting for the small, the poorer families in the rural areas or in the city areas to remit their funds. The third advantage is that because they partner with the local MFI NGOs. For example, one of them is Shakti Enterprise, Shakti Foundation, which has many districts of Bangladesh they cover, especially the southern districts. And the Shakti Foundation, the members of Shakti Foundation, those who are taking money from the Shakti Foundation, they get everything through this bKash system. So they don't have to even go to the this brick and mortar branches of Shakti Foundation. They can use the bKash app, or they can see that what is the balance they have, how much they spend, and all these statements. So these are the major services they are providing.
Thanks. Just to let you know, we have new members, new attendees. I'd like to give a chance for Enrique Hennings, who joined most recently. Enrique, would you have a question, or maybe like to share a comment with us, or for Prasoon in particular?
Thank you, Emilio. Thank you very much for sending me the link, and thank you for the presenter, Dr. Prasoon. I do have a couple of questions. I missed your introduction in the plenary, but I am practically trying to do something very similar what you are doing in Asia, in Central America. No? So we have been working with different institutions, and we are trying to integrate the input suppliers and the credit for inputs in one mobile platform that we have developed in the area. No? So my questions to you is like, how you manage to overcome the problems with the regulatory constraints? Because, for example, in Central America, most of the things goes through the banks, and the banks don't want the competitions, no? So it's very difficult to overcome that, no? So I would like to see how would you approach that?
Yeah, just to give you some example, like in case of Bangladesh, you know, the Bangladesh Bank, which is the central bank and also a member of APRACA, they made the regulatory changes in 2011. And you know, the bcash started in 2011 after the regulatory environment has been changed. So what is my point here is that the advocacy, what we did with the central banks in Nepal, in Bangladesh, in Myanmar, in Cambodia, now the results we are getting maybe after 4 or 5 years of advocacy. So the most important part of it is that the enabling environment, which is mostly through the central bank, they have to allow, like in Bangladesh, they allow the banks to establish subsidiaries who can offer mobile banking services, which is very, very innovative in terms of South Asian context, because the banking is very, very conservative in South Asia. So they allowed the bank. Even now in India also, they have not allowed. The central bank in India is they call themselves as a very pragmatic bank, but they have not yet allowed. The Bangladesh Bank allowed. Now you see the Cambodia, they created their own cryptocurrency, which is a digital currency and can be converted into real at any point of time. So these are all the central banks know their own innovation, and they feel the emergency of reaching out. Actually, in case of I think Latin America, this is very important that. But to my, I don't know about much about the Latin American other countries, but in Brazil, I know the central bank have allowed the banks to open their own subsidiaries. Not maybe not in the similar line with what Bangladesh did, but maybe in a different way. But Brazil allowed. So if we can have a good practices documented and can go to the other banks, central banks, to create this kind of enabling environment, that will be the only solution to have.
Yeah, I also, just for the sake of time, I also see we have Devin Osborne join. Would you like? Oh, he just. I think he just disconnected. Yeah. Anyway, just a minor comment on that, Enrique and Prasoon, just to share a little bit what I've seen. I mean, one of the key constraints in of some of these innovative partnerships is that they're led by non-bank financial sector players that are wanting to provide a certain service, either a payment or an interface or a digital platform that can unite buyers and sellers of financial services. But depending on the country context, like in Central America, which the financial sector is very much bank-led, or sometimes microfinance play an important role. These formal financial entities, they may not be conducive or very welcoming of new ideas led by other actors. They see it as competition. Much of the effort has really gone into supporting the regulators in lobbying them to regulate by service, not by type of provider. So basically, there's a tendency for regulators to say, if you're going to offer credit, you need to be a bank. If you're going to offer payments, you need to be a financial institution. Whereas these new models are flipping the equation and saying, well, if anybody's going to give a credit, regulate what is it that a provider needs to provide credit, mitigating all the risks. But don't force it to become a bank or a financial institution. Let it be a telecom company, or let it be an e-commerce firm. and you regulate us based on your concerns about risks, not by imposing, you know, the type of financial institutions we need to be, because they're trying to, you know, that wouldn't work. And if you make an e-commerce, if you would have made M-Pesa a bank, they would have never transformed or formalized themselves, right? So that's a bit of part of the juggles and the obstacles that you need to face, and it requires a lot of lobbying. But an easier route, like I've seen in Colombia, for example, is that there sometimes you do find that visionary incumbent bank that is willing to host, or like Prasoon said, actually, with one of your examples, that is hosted by the bank, but it's not led by the bank. The bank, in a way, allows this fintech to become and be a subsidiary. It makes a partnership with them, but the fintech really is in full control and can leverage on the licensing of the bank. So you see that, for example, in Colombia with Bancolombia, that has several e-wallet initiatives that are within the group, but separate in a way. They have their own governance and technical capacity, and are not necessarily subject to the banking structures, right? So it is a big challenge, and the solution changes by place to place. But these are some of considerations that we've seen can be helpful. Any other comment or reaction, Enrique?
Yeah, I completely agree with your points, no? And for me, it was very interesting to see how 2 or 3 fintechs that we were supporting, they were started to pick it up and start doing good business, but they have an account within a bank, and the bank closes the account. So and then suddenly these 2 or 3 companies, they had to stop, no? So and that for me, it's basically really a huge obstacles for these type of enterprises, no? And the problem is that at least in Central America, most of the banks that are interested in this, they don't want to go to the ag sector, no? They want to still be in the urban, peri-urban areas and provide more solutions or more digital products, but they don't want to go to the rural areas, no? So that's a little bit the problem that we are facing, no? So.
Thank you. Well, I have to, I'm sorry to say we ran out of time, but it was super useful and interesting. And thank you all for joining this side session with Prasoon. Prasoon, thank you very much for accepting this invitation. I know it's very late for you, so thank you so much for sharing and bringing the Asian perspective. I thought that was important to bring into today's discussion. Have a great day, everybody.
Yeah.
Take care. See you. Bye-bye.
Bye. Yeah. Bye. Bye-bye.
So, hi everyone, my name is Jay. I'm a senior manager, smallholder inclusion and financial inclusion at IDH, and I'm your host. I'm with Juan today, Juan from World Bank, and then we would be taking your questions, and then you can directly ask the question by unmuting. So we are a small group, but if the group gets bigger, you can also type your question in the message or chat box, so that like I will allow you to ask, or like I will unmute you to ask directly your question. So the floor is up to our participants. Go ahead and ask your question to Juan.
Question or observation? I think it can be very well a dialogue.
Okay, I'd like to ask a question, please, or make some comments. So my name is Amy Chan. I am working on a fintech for small and medium farmers in Brazil. And what I'm seeing from government policies is a really strong ministry that thinks about providing external financiers with just very solid instruments of collateral for farmers here. And I was just wondering if this exists elsewhere in the world that you operate. For example, a very sophisticated tool they have here is the collateral using future crop. And this is a very commonly used tool in Brazil called CPRs, which can be securitized and sold on and exchanged as well. And the judicial courts are very solid in executing this type of guarantee. For example, if you know that a farmer will default, you can go to the local judge and you can seize that crop within 24, 48 hours. So these are the types of policies that make our lives as investors and financiers a lot easier when it comes to sort of looking at smallholder risk. What else do you see around the world for this type of sort of policy innovation?
Well, there is a lot of innovation and work being done on the side of collateral for agriculture. And collateral for agriculture is a very, very tricky thing, because oftentimes in many countries you cannot use land as collateral because of legislations or faulty registries, all these type of things. So collateral is a key issue. So there is a lot going on, and I would like to point at a few things. One thing is the whole possibility of using the produce as collateral. You mentioned the crop receipts, that is future produce, but then you have also the issue of existing produce, which would be warehouse receipts and all these type of things, warrantage, which is being used in many, many countries. Then you have also a lot going on in the space of movable assets. So the use of movable assets as collateral. It doesn't only benefit agriculture, but so you would have other sectors benefiting a lot, but this is something that also can help for agriculture. And then you have all the work that is being done in the space of credit registries and so on, which also help to trace better the farmers. One thing is, of course, credit bureaus, but in the case of agriculture, the importance of registries, farmer registries, can be also a very, very important thing in order to be able to know who is your client, where do they farm. You simply get a much, much better flow of information. So there is also a space where a lot is going on. I would like to highlight those. There are more, but I think that those are important. And it's very, very different by countries. You know, you have the crop receipts is something that you have in Brazil. It has expanded to Ukraine, but it usually needs to have very, very peculiar circumstances in order to do it. And you need to have a regulatory framework that allows you to go and access the crop. You need to have some form of backup in case, let's say, the farmer diverts the crop and sells it somewhere else. What do you do then? Usually you have then in many countries that you can proceed with penal law. I don't remember the name in English, but that you can proceed against the person who is diverting the crop. So there are many options there.
Thank you.
Hello everyone. Do you have more questions for Juan? Or comments, discussion points?
Juan, it's Peter here from the UNSGSA. Hi, good to see you again. A quick question on sort of regulation specifically. You mentioned some prudential regulation around capital requirements and also instructions on branch openings, these sorts of things. Are you seeing where basically in the world are you seeing, I would say, sort of agricultural finance smart regulation? And are you seeing that authorities are not only sort of in your policy dialogue with authorities are not only focused on general a regulatory framework for non-bank payment service providers, but are there specific efforts to actually try to facilitate sort of appropriate regulation that would target service providers specifically active in the agricultural sector? And you mentioned, the sandbox models that exist in a number of jurisdictions. But I'm wondering, if you can give us maybe a flavor of some of the things that a regulator can do specific to agricultural finance. Thanks.
The thing is that agricultural finance usually is not a dedicated category for financial sector, and it is usually part of other stuff. Where you have specific regulations related to the financial sector, they are mostly in the loan classification, and also to see that when a loan is in default and what type of loan structures are available. This was a long time. It was some time ago. It was very limiting for agricultural finance that the regulators imposed that you should have monthly payments or these type of things. So those type of things, or also that you have to provision more if you have a longer period of time when you don't get repayments. So these type of things were the ones which were limiting agriculture from the regulatory side. On the other side, what has been limiting are the issues which relate to the use of agents. It's not specific for agriculture. It is more the issue of what you need to set up an agent. What do they have to have? What requirements they have to fulfill? And the more burdensome they are, the least they can transfer into the rural areas, and with it to the agricultural sector. One thing that could be more closely related to agriculture is if there are provisions that would allow, for instance, input suppliers to act as agents. That may be something where you would have more dedicated, more agricultural focused thing, or if you would have the possibility of using the agricultural aggregators also as agents for payments and for financial institutions. So those would be more specific, but usually they don't fall into that specificity. They would fall into the general category: are you allowing merchants to participate, and what are the requirements? You don't see really very, very dedicated agricultural things there. The other thing is, yeah. Mm-hmm.
Thanks. No, I was just saying noted. Thank you.
Yeah.
Great. And then Aggie, do you have a comment there? Do you want to ask Juan something?
Thank you very much, Jay. I did ask. I wanted to ask a question around the experience with subsidies, because I'm from Agra. I work at Agra and work in sub-Saharan Africa. But we've seen that many countries are coming very fast to offer subsidies. And I do agree with the comment he made about these eventually distorting markets and actually becoming disincentives for private sector to come and actually play the role they should be playing if we are to really change and have a functional system. So maybe what lessons and what kind of evidence have you experienced that has given governments the confidence to make this more an economic decision and not a political decision? Thank you.
Yeah, well, subsidies are on the one side a very important tool to promote sound development, but they can also be very, very limiting, very distortive. And as you rightly point out, this is something that needs to be addressed. One thing, I'm sorry, my dog is barking. It's terrible. So one thing is with the possibility of distorting. One thing is that the governments need to be made aware of this, and oftentimes they are not. So you had, for instance, before the issue of Brazil. In Brazil, you have all the subsidies that are going through the public bank and through the cooperatives, but not through all the other commercial banks. So this is something that excludes significant providers from accessing, from entering the market even in some cases. So basically this limits competition. So these general subsidies, which are geared to serve large numbers of people, they should be made available for everybody. And it is a discussion that needs to be held with each government. Usually these things are in the context of a very, very well-established political economy. And so they are what they are, and changing them requires quite an effort to open up the markets and to say, okay, let's include also these. It's also a fiscal issue, because oftentimes if you open up the subsidies to new players, you need to provide these additional funding. So given scarce resources, and in the case of subsidies to start up innovations and to have to look at new ways to serve the markets, one thing which I think is key is that such subsidies are being granted in a competitive manner that is made available, open to all potential providers, so that they can come and bid, and that then there is a qualified technical body to do the selection of such investments. One example for something like this, which we were doing in China, was they had a fund. They are establishing a fund to provide subsidies to startups, and the idea was to do then a co-investment with the startup, but also to bring in, for instance, private angel investors or venture capitalists who would be going into this market and doing much of the selection, monitoring of the investments. In that way, the public sector is providing resources, but it is not engaging in the selection, it is not engaging in the implementation, but doing that together with the private sector actor who would have him or herself skin in the game. So these are models that can be developed and introduced, and which can be very, very valuable to promote innovations.
Great one. So we have a couple more participants, and yeah, before I hear from them, one other thing that you mentioned about interest rates, right? So usually what we see is like there is this informal options for farmers that like they can borrow from a local trader there, get very high interest rates, and then they also have MFIs, which are also more or less quite high interest rates. And then there are formal financial institutes, probably with lesser interest rates, but not farmers usually will not have access to them, maybe based on a lot of barriers, right? So for farmers nowadays, I mean, like it is quite risky to invest in farming and then getting a return on their investment, like let's say 30-40% to pay these interest rates. So what it takes for financial institutes to reach out to farmers and giving affordable loans to them?
Well, the thing with the interest rates is a long discussion, right? So it has been one of the long-standing issues in agricultural finance. And when we say agricultural finance, usually the next thing is people say, yes, but it needs to be affordable and it needs to be cheap. And so, yes, we all want to have affordable interest rates, but on the other side, also the interest rates have to cover the cost of providing the services, and they need to provide also some sort of profit to those who are giving the loans. So if this is, you need to square both in order to get it going. So how do you do it? And in agriculture, I think that there are several things that can be done. One thing is, of course, in general also is to have scale. Is you need to reach scale. If you reach scale, then you are also able to reduce your costs, because you are defraying the overhead costs of management, IT, and so on and so on. So this is one very important thing that needs to be achieved. A second one is, of course, is the issue of professionalization and of automatization. So the use of technology in order to do the assessment. But before thinking about technology, as the wonder is to have adequate concepts to assess the risks and to also manage the risks. the better you understand the risks you're facing, the more you will be able to define adequate products. And you have in many countries, and this is something which I think is very important. Usually when we talk about agricultural finance, also the idea is very prominent. Oh, but this is high risk. And the high risk is oftentimes not verified by practice. If you see, for instance, in many countries in which we work, you go and you visit the different lenders, banks, MFIs, and oftentimes you hear, oh yes, but agriculture is our best portfolio. It's not the worst, it's the best. So this means that the risks can be managed. So this is another issue which is very important, is managing the risks and keeping them low. And in keeping them low, you can also use instruments that can help to make them more transparent and to deal with unforeseen events is insurance. So this is something that you can also use. So, but insurance is an additional cost. So you have to be working in all different areas in order to reduce. And one of the big promises, in which I think is the case with these new approaches, with interlinking these different players who are using technology, is that this may help to decrease the cost substantially. It will decrease the costs of gathering information. It will decrease the costs of transacting with the smallholder farmers, so this is important. But we still have to see it. We are not yet seeing it. And in some cases, we will also have to think, well, you will have transactions which are very small. So if you have the $10 and $50 loan, $15 loans, well, how cheap can you offer them? There is a limit to what you can do, even with technology. So these are things that need to be addressed, and we need to see still how technology and if technology will be helping to significantly reduce the risks, reduce the costs. But there is promise.
Yeah, great. Yeah, sounds good to me. We have on the call Ajay Kumar. So Ajay Kumar, would you like to comment on the session or ask Juan some question that you have?
Maybe while Ajay is thinking of a question, I just wanted to ask one and put something on the table that's closely linked to the final point there. What do you think would be a good use of donor resources or investment in order to help tease out actually how to prove the promise of technology in terms of lowering the cost of credit, or the promise of fintech and the role of fintechs in terms of lowering the cost of credit? Because we've heard, I've read sort of in a number of places, that hasn't necessarily taken place, and that a majority of fintechs are not even necessarily focused on the bottom of the pyramid or those who are traditionally unbanked. Thanks.
Well, I think what we as donors can do is to provide, I think, issues such as challenge funds are one of the best ways to go, is to provide support to entities that come up with innovative models. So what you need to do is you need to define first, okay, what is your target? What do you want to achieve? And then get out and provide these resources. We have ourselves done something like that with a project we have with promoting access to finance by women farmers through the use of technology. This is a project we are just finalizing, and where we looked at 3 examples. So we did the tender. We said we want to have proposals of approaches that help to increase access of women to finance through technologies. We wanted to have somebody who has already either engaged with women or finance and agriculture or technology. So they should have at least one of these 3 characteristics, so that they have the background to enter the market and that they are interested in entering this space. So we did out the tender. I think we got 12 or so proposals, It was not big money which we provided. We provided then technical, the grant was then something that was for technical assistance. So the provider would then come to us and say, okay, we want to have technical assistance for what? For usually it was to do the market assessment, to define the products, to do and they did it. And after 1 year, we have now the results of this, and it's quite interesting. So this has helped to bring them closer to this target market. And especially, I think what is very, very important in this is it has allowed them to see that this is a market, so that women farmers can be a market for them. So similarly, you can go and say, okay, we want to see, okay, that there is a path to reduce the costs and to make this a more viable business. But what is important is that this type of tenders and these type of projects are designed in a way that they align with the business model or the business idea, the business case that these entities are pursuing. So if the fintechs are pursuing this, and if this is something that is part of their core business or can be part of their core businesses, then it makes sense.
Great, thank you.
Well,
Yeah, it seems that like we don't have any burning questions from the audience, but I do have one more thing that I would like to ask you, Juan. So what I see also, like Hedwig briefly mentioned about this, it is about like having this open farmer databases. So in your experience, we are also seeing some interest coming from especially cocoa producing countries, that they would like to have a kind of national farmer database or like traceability system to make sure to address multiple issues with one stone. So such as like maybe deforestation, child labor, at the same time living incomes for the farmers. But I haven't seen quite a momentum, or like private companies are not jumping onto that boat because of some challenges. Have you, in your experience, have you seen any national level farmer systems worked before, or some tryouts that have been made?
not the national level. On national level, what I have seen is the issue of registries, and that is what is the more important, that you have farmer registries and that you have land assignments, that is clear. Costa Rica has a great system and has had it for a long time. So this is something that can help to facilitate simply dealing with the farmers. Other than that, looking more at these ideas of having information that makes it feasible to trace production and the conditions in the production, there what is the most prominent example is what is being done with entities that provide fair trade coffee, or that are providing coffee that is there is this green seal. So there are a couple of these type of things, and these entities, they have experience in doing the tracing, in doing the tagging, in ensuring that these conditions are being met and so on. But they can only operate because there is a price surplus. There is a surplus. So when they sell this coffee as fair trade coffee, they get an additional price, and that is, or organic. The organics are very famous for that. So that is what makes it feasible then for them to pay for this additional cost, because it is more expensive to do all these tracing of several conditions. So that is where something like that is happening. I think that for the future, this is something that may become more important, but it will come more from the legislative side, and especially of the consumer countries, of the countries that are importing agricultural goods. They, I think, will at some point in time say, hey, we don't want to have coconut oil, which is cocoa oil, which is coming from deforested areas and so on. So we need to have the traceability certification and so on. And that is what will then force to these type of things. It is already doing. actually.
Great, thanks a lot. So we have one last question. I know that like we are already running out of time. The question is, how can we overcome the distortion of competitive effects of subsidies?
How can we overcome the distortion? Well, one way is not to provide subsidies at all. Then you don't have the distortion. And the other thing is that you provide the subsidies to all that qualify. So that you say, okay, all farmers below blah, 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 access have a right to a subsidy. Then you would be reducing the distortions. If this is not feasible, then you have to establish criteria to distribute the scarce resources. And that means you need to define criteria that allow people to access the subsidies, and you need to define the mechanisms to enforce it. And this is something that, well, for which you need the registries we were talking before and those type of things. So that's the only way I would see to do that.
I was going to say that we've had some really bad examples of subsidized interest here in Brazil.
Yes.
A few years ago, when interest rates, base rates were about 14 or 15%, the government was offering subsidized loans to farmers at 6%, which was a huge disincentive. This is a working capital loans. What they would do is just take the loans, put it in the bank, and then get 6% interest rate arbitrage without needing to farm. So we had a lot of sort of issues with that in the past year.
Yeah, that is also something that is very important, is the design of the subsidies, because they can be really terribly designed. And usually, again, there is no single model, but usually if you have subsidies should go to startup things. Subsidies should go to support public goods. Definitely, if you say, okay, you're saving the forest, this is something that you may want to subsidize. And subsidies should go also for social purposes. But then you have to design them in such a way that you do not crowd out. And usually there you have possibilities. If you provide subsidies for smallholder farmers, it's better to do it via a direct subsidy, per farmer or per hectare subsidy, than to do it via interest rates, which then would limit the possibility of providers to come in.
Yeah, so thanks everyone. I mean, like we are already running 5 minutes late. We have one more question, but I will stop here. Thanks Juan, and then I will reach out to Aggie by providing my email to talk about the last question. But thanks a lot. Thanks for your time participating in the webinar. Thanks for all the participants for actively asking and engaging in the discussion. Thanks a lot. Have a wonderful evening. Bye.
Bye.
Bye, Jay. Bye, everybody. Thank you.